One of the main reasons dividend investors invest in ETFs like SCHWAB U.S. Dividend Equity ETF is to reach annual dividend income hefty enough to at least cover ordinary expenses and, in ideal scenario, even overtake income they make in their active day job. These goals are easy to comprehend. At this point, investor would be financially free and independent. This is exactly the end goal many investors are aiming for. Even if nowadays we have many tried and true methods to reach this exact goal, the majority of investors still fail to understand that it can be achieved rather easily and does not require expert-level understanding of stock market or the market overall. Having this in mind, in this video we will analyze, in my eyes, one of the best long-term dividend growth ETFs offered in the market. I suggest you watching this video till the end, since I'm going to draw a hypothetically possible situation how only $50,000 invested in this exact ETF can make any investor reach his goals of becoming financially independent, as well as have a dividend generated income that can even outgrow income they're making at the day job. Although nowadays we have a lot of investment vehicles and especially different dividend growth ETFs that in theory could help you reach same goal just as easily, today we are going to talk about SCHWAB U.S. Dividend Equity ETF. Now, I would like to explain to newer investors what is SCHWAB U.S. Dividend Equity ETF. Its symbol in the market is SCHD. This exact ETF is made to track total return of the Dow Jones U.S. Dividend 100 Index before fees and expenses. SCHWAB U.S. Dividend Equity ETF is exchange-traded fund that is launched and managed by Charles Schwab. This ETF invests in U.S. markets. This ETF invests in stocks of companies of many different sectors like energy, material, industrial, consumer discretionary, consumer staples, healthcare, financials, information technology, and more. SCHWAB U.S. Dividend Equity ETF invests in growth stocks across diversified market capitalizations and, of course, in dividend-paying stocks. Few worth noting facts are that this ETF's fund inception date is year 2011, so this fund is around for quite some time now. This is important because we have a decent track record to gauge how this ETF performed in the past. And of course, the past performance does not guarantee how it will perform in the future, but at least we have some sort of data to analyze. SCHD ETF is one of the largest and most well-known ETFs in the market and has almost $49 billion of net assets. One more important thing is, you will be able to keep your kidney since you really don't have to sell it to hold a SCHD ETF. Total expense ratio is one of the lowest in the market, only 0.0%. That is very important since this ETF is made to hold for a long term. As we mentioned before, SCHWAB U.S. Dividend Equity ETF tracks Dow Jones U.S. Dividend 100 Index. Soon we will go over the holdings in this index. But first, I would like to explain why it is very important. Now, looking at the current traded price of this ETF is $74 per share, and in my opinion, this is decent time for long-term investors to delve into this ETF and consider to invest, since it is pretty close to being in the middle of the 52-week range at 65.96 and 79.49. One more thing worth mentioning, that SCHD ETF is 185% up over the last 12 years. And this is not even counting dividends, of course. In a second, we will calculate how much it is up if we were counting dividends. Sit down, since this could really blow your mind. There are a couple of reasons why a SCHD ETF is becoming one of the most favorite investment vehicles for many investors. After this video, it might become one of your largest holdings in your entire portfolio too. One of the reasons why it is, a SCHD ETF is very well diversified. That being said, let's do SCHWAB U.S. Dividend Equity ETF holdings breakdown. Sectors from the largest holding to the smallest, which make this a SCHD ETF, are industrials 18%, financials 15%, healthcare 15%, consumer defensive 12%, technology 12%, consumer cyclical 9%, energy 9%, communication 4%, basic material 2%, and other utilities under 1%. Taking into consideration this ETF is so well diversified, while invested in this SCHD, you will definitely have a luxury to sleep at night, since you are going to be worry-free if few stocks perform bad. This is because this ETF consistently has 100 holdings and is invested in companies like Home Depot, Broadcom, Cisco, Pepsi, Coca-Cola, UPS, Amgen, Texas Instruments, and Chevron. What these companies have in common is that all of them been around for a long time and most importantly, been paying dividends consistently for a long time. Not only that, these companies have been raising the dividends paid for the investors over time. One more important thing to mention is that SCHWAB U.S. Dividend Equity ETF has a dividend yield of 3.51%, which is basically a ratio that shows you how much income you are going to earn in dividend payouts per year for every dollar invested in a stock, mutual fund, or an exchange-traded fund. Dividend yield ratio is an essential consideration for investors, since it represents the annualized return a stock pays out in dividends. Although 3.51% is not so high starting yield if we are talking about stocks or even ETFs, if you would look at the capital appreciation that this ETF encountered in the past 10 years, and if the history would repeat itself, investors are not only going to be cashed in of the dividend itself, but also the price of ETF. One more really interesting and important metric to understand is that a SCHD ETF has 12-month dividend growth rate of 7.13%. The dividend growth rate is the annualized percentage rate of growth that a particular stock's or ETF's dividend undergoes over a period of time. So, you don't have to be a genius or mathematician to understand that the higher the dividend growth rate is, the better. Compared to other ETFs, SCHD has a really high dividend growth rate. Looking deeper, dividend growth rate over the last 3 years was 12.33%, over the last 5 years 13.92%, over the last 10 years 11.32%. This being said, even if the most recent 12-month dividend growth rate is only 7.13%, if SCHD ETF will see a big dividend raise on the next quarters, the dividend growth rate will most likely be above 10% again, which basically means that investors who invested early will get paid more and more in the future. Looking deeper into SCHD ETF's history dividend payouts since the fund's inception, this ETF only paid for its investors 14 cents per share per quarter, and currently SCHD is paying 70 cents per share per quarter. It is basically 5 times as much as it paid 5 years ago. You might be wondering why dividend growth rate is so important. In a second, we are going to share a hypothetical situation how $50,000 initial investment, which is relatively small, and the dividends reinvested into SCHWAB U.S. Dividend Equity ETF can really snowball initial principal and grow over time to a point it might even replace your full-time job. It is Gentleman's Finance channel. Here we'll learn about different business opportunities, how to make money and invest wisely. Here you will also learn how to increase your wealth and become debt-free. All men should take care of their own finance. If you are interested in accumulating wealth and improving your financial future, make sure to subscribe this channel and hit the like button. Also, comment down below I subscribed, and I will try to answer all of your comments. Now, let's go back to the video. Let's take a look at dividend calculations as well. In our example, initial starting principal would be $50,000. So, in our hypothetical situation, investor was to invest $50,000 into SCHWAB U.S. Dividend Equity ETF in their early investing stage, when SCHD ETF has a historical annual dividend yield of 3.49% and yearly dividend amount increase of 8%, which obviously could be higher or lower. Let's add up expected annual share price increase at around 4%. As well, don't forget to reinvest dividends right back to this ETF. So, having all this information and hypothetical situation, let's calculate what exact result we would get if we were to repeat history and invest for 30 years. The first year investing, this investor would invest $50,000 and a dividend yield 3.49%. In the first month, he would earn $1,767 in annual dividends. Next year, with no additional contribution to this ETF, just out of annual share price increase and reinvested dividends, an investor would have at around $53,000. As well, he would have $1,960 in annual dividends. So, when we go further and further into years in SCHD ETF, dividends get bigger and bigger since we reinvest dividends earned right into ETF, and SCHD ETF has as well quite a long history of increasing the dividends, which basically means investors are expected to get paid larger and larger dividends as years go on. If we skip few years of compound interest and dividends reinvested, at year 5 in SCHD ETF, investor would have $65,000 invested, as well $2,700 worth of yearly dividends. Going further, in year 10, this investor has close to $100,000 worth of SCHD ETF and annual dividends worth of $4,800. In year 15, investor would have $145,000 and yearly dividends worth almost $9,000. From year 15 going further into this 30-year time frame, you will really see the compounding effect getting more and more noticeable and numbers increasing way faster. That's the best part of compound interest. The longer you stay in the game, the faster rate of growing you get yearly. Talking about bigger, at year 20, investor would have $230,000 invested and yearly dividends of $70,000. Year 25, $381,000 invested and $34,000 in dividends. And finally, in year 30, investor would have $670,000 invested and yearly dividends of $73,000. Take into consideration that this result is achieved with only $50,000 initial investment, all dividends reinvested, and most importantly, without any additional money invested. Don't know about you, but I was quite shocked. The purpose of this analysis is to show a regular person that doesn't have millions of dollars in his pocket still can make sizable amounts of money. Of course, this is taking into consideration that this person invested into high-quality dividend growth ETF like SCHWAB U.S. Dividend Equity ETF or many others. Another thing we can take out of this example is that staying invested long-term with dividend reinvesting, we can start to see snowball effect come into place and grow our portfolio exponentially. And even if we encounter some negative years, staying consistent and investing long-term while dollar cost averaging through the negative and positive years with dividend reinvested, we still would see amazing results. In our discussed case, investor who invested initial $50,000 after 30 years would have yearly dividends of $73,000, which can easily replace your full-time job. Thanks for watching. If you found this video interesting, like and subscribe. As well, I would be really glad to see a discussion down below. What is your favorite high quality growth ETF you are planning to invest long term?